Well, hello, traders and investors. Today is Tuesday, November the 10th. I cannot believe it's already, the month is already a third way done. The presidential election still contested. But what are we going to do? We're going to focus on the markets. And for those of you who don't know me by now, my name is Roger Scott, and I'm the head trader of Wealth Press. And I like to say, let's get into it right now. So, in terms of the agenda for the week, the market is being still driven by the election. There's not much news to report this week except for jobless claims. This is a really, really big report. I know Jerome Powell is speaking on Thursday, but the jobless claims is the big report for the week. It really is. Now, here's the thing, and if you watch me, I'm going to repeat the same thing I've said many, many times. We're still above 700,000. We've been at that level for a while. So while we're moving below the moving average, and the number is most of the time better than the expectations, the problem is we've been hovering between 1 million and 700,000 now for quite some time. So that's negative. That's very, very negative. So it's coming down, but it's coming down very, very slowly. We also have Consumers Price Index. That is going to be very important because that's going to let us know if we have an inflationary environment. The consensus is 0.2. Consensus is 0.2. Prior 0.2. I'm expecting similar numbers. I'm not expecting anything major. But those two reports and the PPI final demand, those are the biggest reports. I'm also going to focus on consumer sentiment because that's going to reflect on the GDP, which drives 2/3 of the stock market. So this is a very big report. Again, nothing really coming out tomorrow. Jobless claims is the big report, and CPI, and then we're going to watch the PPI and consumer sentiment. And again, consumer sentiment is not a big report. It just gives us a good indication of where we should look at for the GDP and to see how imports and exports are looking in light of consumer sentiment. Because again, consumer sentiment, folks, it's like a reflection mirror for the GDP. It's very, very, very important. Let's talk about news. Man, there's been a lot of news this week. And again, it's just, we've got COVID-19, Pfizer, and we've got this election, and we've got China. So we've got three things going on at the same time. Global stocks futures rose second day in a row in hopes for progress towards normality via COVID-19 vaccine that might allow the world to revive manufacturing, shopping, and a normal life. And I keep saying it, folks, even if we have a vaccine today, things aren't going to, it's going to take 6 months to a year for things to begin to get back to normal. Benchmarks in London, Frankfurt, and Tokyo advanced, while Shanghai closed lower. Japan has been trading at a 29-year high as shares rallied after Biden was declared president. News about possible progress on COVID-19 did not hurt either. Investors were enthusiastic about Pfizer. Yesterday, they said vaccine under development. It might be 90% effective in preventing COVID-19. But it's not, even if it's released next month. I was talking to my doctor. I had my annual checkup last week. It's going to take healthy people 6 months to get it. 6 months. So we're not out of the woodwork just yet. The Shanghai Composite lost a little bit after spending most of the day in positive territory. Authorities said that they have quarantined 186 people. I hope it's not starting up in China again. And conducted virus tests on more than 8,000 after a freight handler at the city's main international airport tested positive. Here we go again. No additional cases have been found so far. And are we going to believe China? I'm not so sure. Their exports have been on target. So that's leading me to believe that they are not struggling with COVID-19. If their exports begin dwindling, then we know there's an issue. Tuesday, China reported October inflation fell to its lowest level in a decade. Gives Beijing room to spend more, easy access to credit further to support the economic recovery. Good. Markets were relieved by the resolution to extended uncertainty. They sure were. About the battle for the U.S. presidency over the weekend. Biden clinched the final electoral vote to unseat President Trump. And President Trump is not going to concede. Look, I'm going to tell you guys something about President Trump. He's not good at taking losses. He's going to do everything. He's going to claw. He's going to do everything possible to put as many spikes in Biden's path. But that's just how it is. I mean, it'd be great if we could just move on, but he's going to make it difficult. Congress may be split between Democratic control of the House of Representatives and Republicans in the state. And folks, I think the fact that Republicans are going to be in the state is really helping this market because we're going to have some good checks and balances. The Republicans are going to be holding the purse strings. So Biden is going to be like a dog on a leash running wild trying to do things. And meanwhile, the Senate is going to be reeling him in. All right. So don't get too out of whack. We still have a Republican Senate. All right. Keep in mind. The impact of the vaccine announcement highlighted the virus' economic dominance, temporarily overshadowing just about everything. Folks, what did I tell you before the election? COVID is driving this right now. Not the election, COVID. This COVID, everything that happened in February, March, and April, the central banks giving money, the Fed lowering rates, all that is going to have an impact on the market for much, much longer than this election. Potential legislative gridlock also makes chance of a rescue package for the economy for Congress likely to be smaller than if Democrats had swept control of all of Washington. Of course. I mean, you're going to give Democrats the Senate. Oh, boy. We're going to go on a spending frenzy, and we don't need that right now. We really don't need that right now. Look, I'm a conservative Republican, but I'm not biased. I look at the market from both perspectives. I'm very objective. But I think it's very, very good to have some checks and balances. And even if Biden is going to be elected, the fact that Senate is going to be Republican tells me quite a bit. Now, looking at the markets today, let's look at how the markets are looking. S&P supposed to open down 0.81. The Russell, which is leading, as I've told you guys several times, it's up 2.5%. Small caps, Biden, no trade war. Bye-bye trade war. QQQ, let's take a look. Shouldn't be that great either. Ooh, nasty. Down 1.5%. SPY is down 0.2%. So the Nasdaq is taking the big rump. And the Russell is up 1.4%. Let's look at the Dow. The Dow should be up. It's got a lot of blue chips. Yeah, 0.66. So the Russell continues to lead by a factor of 2 to 1, 3 to 1. I mean, look at this, up 1.4, and look at the QQQ, negative 1.5. So it's telling you, again, I hate to say I told you so, but boy, oh boy, I told you so. And here's the factor you guys need to pay attention to. NASDAQ has not taken out the September 2nd high. And NASDAQ is down 1.5% right now. The S&P did take out the September 2nd high, right here, and it's only down 0.22. And the Russell made all-time highs yesterday. I think it was all-time highs. Let's take a look here. Yes, the Russell made all-time highs yesterday. And remember, it's been pent up since making all-time highs back 2 years ago. So it's got a lot of catching up to do, and it has to be, that's going to happen. Look at this flat line. This breakout looks like it's going to be meaningful. And if there's no trade war, they've got another 5-6% pent up in here just to move in line with the SPY. Look, the SPY's been moving up. Look at that. The Russell, not at all. So I'm staying with the Russell right now. I've been telling you folks for about 3-4 months now that it looks like it's outperforming, and if it does, Biden's going to say bye-bye to this trade war, and we're going to see more upside from small caps, and Russell is small mid caps, and it looks like we are. Now, I've got a good stock for you today. This is a pullback, and this is a healthcare stock. It's not a medical stock. It's not a tech stock. It's a medical stock. It made all-time highs or multi-year highs. You see that? Big, and it did it after that September 2nd high or after August. It's been congesting, and now it's consolidating, and now it's at the 50-day moving average. Now, I'm not touching the stock until it takes out the 70-30 to the upside. And if it breaks this low today, if it breaks the 50-day moving average, I'm not interested. So I'm watching this company very, very carefully, and I want to see it break above 70-30 today. And then I would put a sell stop right below this bar right here, probably right at the 65.40 level. So it's a low-risk trade. I think it's going to fill the gap, and if it doesn't take out the high today, the trade is no good. And if you're in the trade and it takes out this low, the trade is no good. We're waiting for this trade to fill this gap and for the NASDAQ to turn around. And again, let me show you something about this stock. It's a healthcare stock, medical instruments. They are not as dependent on the election. And with Biden at the wheel, healthcare stocks should go up. He's going to allocate a lot more of the government aid to healthcare. Look at these numbers. 5-year earnings growth, 5-year revenue, 5-year return, 1-year return, 46%. The stock is looking good. What I love about this stock is earnings per share growth versus previous quarter and earnings per share growth versus previous year. Look at these numbers. That means there's a lot of institutional accumulation looking at the stock because it's outperforming the market by a long shot. Now, those fundamentals may not matter much in the short term. They do matter in terms of the strength of the stock and in terms of how it's going to hold up and how it's going to be accumulated. So keep in mind, HOLX, Hologic, buy above 70-30, 70-40, and liquidate if it breaks this low. Now, before I let you go, I've got something big for you today. While everyone's been caught up in this week's election results, one stock has been quietly positioning itself for massive gains. It's a stock that's trading around $10 right now. But from our research, it can go up to 100. 100. That's a 900% gain. You can't afford to miss that. Your window of opportunity to get in on this trade is starting to close, but there's still time to invest before the stock shoots higher. If you want to join us for the ride, click on the link below for an exclusive access to the biggest stock gain of the year. You don't want to miss out on this. From $10 to $100, 900% gain. Follow the link below. Check it out for yourself. And I'll talk to you guys soon. Have a great day. Bye.